This is a special edition of Markets with Megan. We released today a white paper about the Federal Reserve. We wanted to break down and explain what the structure of the Federal Reserve, but more importantly, the Federal Open Market Committee. This is the committee that everyone focuses on. This is made up of Federal Reserve members. They vote on monetary policy. They meet 8 times a year, and when they speak, the markets listen. When those meetings happen, the markets tend to react. So we wanted to come to you with an education piece on what they do, how it's made up, but more importantly, what you've seen in the headlines lately about the changes that we're going to have next year to the Federal Open Market Committee. Now, the FOMC consistently, actually on an annual basis, has 4 rotating voting members. These are different regional bank presidents. So 4 will go out this year and 4 new ones will come in next year. But it's also the same year that we are expected to get appointed a new Federal Reserve chairman. So there's been a lot of headlines and scrutiny around who's been the front runner for this chairman, and that is Kevin Hassett. He's the director of the Economic Council and does have a close relationship with President Trump. So there's a lot of concern around his very dovish views coming into the Federal Open Market Committee and the fact that they won't be as independent as they should be. Remember, the most important thing is that the FOMC isn't an independent entity. It does not operate with any political persuasion, and we do not think that that's going to change if Kevin Hassett comes in to become the chairman. Regardless of who sits in that spot, that chairman is more concerned about a legacy, not necessarily a political party. That rotates on a 4-year term as well. We think that when you look at the consistency of the Fed, the way it looks this year from a voting perspective, the ratio of hawks to doves actually isn't going to change next year. It's going to remain the same. So the moves in monetary policy will be highly dependent on what happens with inflation, especially since the most recent Fed expects that growth is going to accelerate next year. Now, there's a couple things we do know, that just looking at the new voting members that will come in, this is going to be a divided Fed again. If you remember at the December FOMC meeting, it was the first time since 2019 that we got 3 voting members that dissented to a rate cut. So that shows there's some divisiveness here in this committee. That isn't going to change next year. So we expect volatility will remain around the equity markets when these officials speak, as well as the regularly scheduled meetings that they have. Now, from an investment perspective, we are not making any asset allocation changes around who's going to be chairman or who rotates in and out. Instead, we're going to focus on the economy, the inflation environment, and the earnings environment. We will monitor this because if a chairman does, for say, come in and filter those dovish views to the rest of the committee in an environment where inflation's not at that target, that can be inflationary. On the same side, if the hawks take over and they start to tighten policy when the economy or the labor market is weak, that could have an adverse effect as well. That's why we're not making any changes at this time. The economy, inflation, earnings growth, interest rates, this all is more important to us when we look at asset allocation than who's sitting on the FOMC. That's all we have today. We welcome you to take a look at the white paper as well as the video that we have listed on our website, verdence.com. Thank you.